Ever wondered why Bitcoin, the world's premier cryptocurrency, halves its mining reward every 4 years? In this video, we are going to discuss the following: overview of Bitcoin halving, reasoning for Bitcoin halving, impact of Bitcoin halving on the crypto space, impact on price of past Bitcoin halving events, and prediction for halving in 2024. Welcome to Money Funnel, your ultimate gateway to financial empowerment. Get inspired, get motivated, and learn the path to wealth because you deserve to live the good life. So, what is Bitcoin halving? Well, it's an event that slices the reward for Bitcoin mining new blocks in half. It means miners, those tireless number crunchers, receive 50% fewer Bitcoins for verifying transactions. But why does this happen, you ask? The rationale behind Bitcoin halving is twofold. Firstly, it's a way to control the supply of Bitcoins, ensuring that the total number of coins in circulation never exceeds 21 million. Secondly, it's a preventative measure against inflation. Think of it as a digital version of gold mining, where the more gold you mine, the less gold there is left to mine. Just as gold becomes harder to find over time, so do new Bitcoins. And this scarcity is what helps to maintain and potentially increase the value of Bitcoin. In essence, Bitcoin halving is a deflationary measure designed to preserve the purchasing power of Bitcoin by slowing the creation rate of new Bitcoins. So, what exactly does this halving mean for Bitcoin miners, investors, and the overall market? Well, let's unravel this together. The Bitcoin halving is a pre-programmed event in the Bitcoin network that reduces the reward for mining new blocks by 50%. This event occurs approximately every 4 years, or after 210,000 blocks have been mined. Now, why does this matter? It's all about supply and demand. As the rate at which new Bitcoins are created decreases, the supply of new coins entering the market also reduces. If demand remains constant or increases, this reduction in supply can lead to a rise in Bitcoin's price. For instance, let's take a trip down memory lane. Following the first Bitcoin halving in 2012, the price of Bitcoin rose from around $12 to over $100 within a year. After the second halving in 2016, Bitcoin's price skyrocketed from $600 to nearly $20,000 by the end of 2017. And in the year following the third halving in 2020, Bitcoin reached unprecedented heights, hitting a record high of nearly $65,000 in April 2021. However, it's not all roses. The halving can also impact miners' profitability. When the block reward halves, miners earn less for the computational power they contribute to the network. This could potentially lead to some miners exiting the market if the costs of mining exceed the rewards. However, this reduction in competition can also benefit the remaining miners. But here's the silver lining. Over time, the decrease in supply of new coins, coupled with the ever-growing interest in Bitcoin, could potentially lead to price appreciation. So, while Bitcoin halving may initially seem like bad news for miners, it has historically proven beneficial for the market and investors due to the price appreciation that follows. So, whether you're a seasoned investor, a curious onlooker, or a dedicated miner, it's clear that Bitcoin halving is a significant event that shapes the trajectory of this digital currency. Now, the question on everyone's mind is, what will happen when the next halving occurs in 2024? Predicting the precise impact of Bitcoin's halving in 2024 is akin to gazing into a crystal ball. However, we can make educated guesses based on historical patterns. Many are of the opinion that the halving could lead to an increase in Bitcoin's price, similar to the surge that followed previous halvings. This is driven by the simple economic principle of supply and demand. As the supply of new Bitcoins decreases, the demand could potentially drive up the price. In addition to this, we should also consider the advancements in mining technology. More efficient and powerful hardware could potentially influence how the halving impacts the Bitcoin network, possibly reducing the impact of the reduced block reward on miners. While the future is never guaranteed, the anticipation of the 2024 halving continues to fuel discussions and speculation in the crypto world. So, we've peeled back the layers of Bitcoin halving, but what are the key takeaways? Let's do a quick recap. Bitcoin halving is a phenomenon where the reward for mining new blocks is halved, thereby reducing the supply of new Bitcoins into the market. This intriguing process impacts the market, miners, and investors in significant ways. The market generally sees increased volatility around halving events as traders speculate on price movements. Miners, on the other hand, face increased operational costs as their rewards diminish, forcing some to exit the industry. Investors often find themselves in a whirlwind of uncertainty, balancing potential rewards against the risk of price drops post-halving. As for the 2024 halving, predictions range from a bullish surge to a more conservative steady growth, reflecting the diverse array of opinions in this ever-evolving crypto space. Bitcoin halving is a fascinating aspect of the crypto realm, a testament to Bitcoin's ingenious design to maintain its value and scarcity. As we approach the 2024 halving, all eyes will be on Bitcoin to see how it navigates this next milestone in its journey. To learn more financial tips, watch the next video recommended by YouTube here. Thanks for watching.